Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our guest on the show today. Joining us today are Sharmila, Joshi and Vivek Mavani, who are independent investment advisors, and Sangeet Lakkar of Newberry Capital. Many thanks for all of my guests for joining me. On the show today, we discuss Infosys, where it raised its FY20 revenue guidance and also increased its capital allocation policy to the shareholders. The stock is one of the top traded counters and the best gainer on the Nifty. Quess Corp has been on the news of late. The stock surged on Friday of news over Amazon buying stake in the company. It has also been reported under the cloud because of some receivables that it needs from the government, and because of that the counter was down in trade. Sugar stocks is something to focus, and we asked our analysts whether they would bet on any of them, given the fact that over the past few days we have been seeing the rally again continue on sugar stock. And lastly, we discussed stocks where analysts find valuation concern. Of late, you've seen counters like Titan or Bajaj Finance or Havells correct significantly because of concerns as far as valuation is concerned. Are there any stocks which our guests find that are having a bit of valuation concern? But let's start with the first one, Infosys. Now, the numbers were in line with estimates, but two things that worked for Infosys, or three things probably, is the fact that it did better than TCS, so probably money is flowing into Infosys. It's up 6.5%. The guidance was raised and the capital allocation policy was increased even further. So there is definitely much more traction happening on Infosys, up 6.5% on very high volumes today. But what's the view on Infosys? Is Infosys the top bet, or will TCS continue to have that spot? We'll ask our guest. Vivek, firstly a word on the numbers. Would you believe that Infosys has now finally started in closing the gap on TCS?
Well, one really hopes so, and given the confidence of the management on Friday evening, both upping the guidance on the revenue growth front after having delivered double-digit growth on revenues across all segments, across all geographies. So it's not that you had something which pulled up the results on the positive, but it was the overall every aspect of the business doing better. So it certainly seems to suggest that that growth momentum is back in Infosys after all the management issues a couple of years ago. Of course, the other significant positive, they are upping the guidance to 9 to 11% and maintaining the margins 21 to 23% range. Of course, positive. The third, of course, being the 85% of free cash flows to be returned back either by dividends, buyback, or whatever, notwithstanding the taxes on buyback and increase on dividends and by way of surcharges. But net, the valuation gap, Infosys had started trading at a discount to TCS because TCS ran up much faster in the last couple of years, given the consistent growth TCS has delivered. So Infosys now is at perhaps about 19 times current year earnings. TCS is whereabouts of 23, 24 times. So Infosys has some headroom in terms of closing the value, being closer on the valuation multiples. And it all seems it will probably happen in the next 1 or 2 quarters.
Okay, that's the view that's coming in on Infosys. Sharmila, what did you make of the numbers? It's up 6.5%. Is this the right time to get in? Infosys, would you prefer TCS over Infosys? What's your sense on this space?
So I think for the longest time, for the last many months, I've maintained that I'm positive on IT as a sector, and within IT, I have liked the large cap IT simply because of the valuation picture that has emerged, where mid cap IT in fact has been more expensive than large cap IT. And again, over there, I maintained that my favorite has been HCL Tech. So whether I prefer Infosys over HCL Tech, I'll wait for the numbers. But one thing I think the Infosys numbers have definitely done is, one is, this whole upping of the guidance at a time when TCS numbers they did sort of cast some shadow over what the future could be. Also, there was that report that suggested that large deals could be a concern going ahead. So I think it's sort of put the confidence back in the sector, because not only did they raise the revenue guidance, but their deal wins were also good. So I think that's a definite positive for Infosys. And I think the second big positive is that somewhere you now get a sense that for the last couple of quarters there was a feeling that maybe margins could were not bottoming, they were sort of all over the place. But now there is a sense that margins have also bottomed out. So I think these are two real big positive takeaways from the Infosys numbers, that the deal wins are there, the revenue guidance has been increased, and I think it will just sort of put the whole confidence back in IT as a sector. So I will wait for HCL Tech to see whether I prefer Infosys over HCL Tech. But yes, I think a good set of numbers.
You are happy with the numbers that
Yes,
Infosys
absolutely.
came out with. Sangeet, what's your sense? Were you happy with what Infosys delivered, what they guided, what they commented?
So, I mean, yeah, no complaints on the numbers, and you can see that on the screen also. I think the most surprising bit was they raised their guidance in the first quarter.
Yes.
I mean, I haven't seen that for a long time, wherein the guidance is revising the first quarter results itself, and that's backed by the deal wins numbers. And we have been talking about the slowdown in North America, or the visa cost and the regulation regime, and North America grew 13% for them. And this, as Vivek and Sharmila pointed out, this is on the backdrop of TCS reporting a muted set of numbers. So I think it's a Infosys specific phenomena. Valuation gap should narrow down, and I would remain positive on the stock.
Seeing both Infosys and TCS, you think this quarter will be decent for IT? As a sector as whole, large cap IT at least?
So I think in terms of revenue it should, but in terms of margin a lot will depend on the currency movements also. So that is something to be watched out, but I think it's a safe bet, because it's a cash generating machine, these IT companies. Infosys now intends to distribute a larger share to the minority shareholders. That's also positive. So it's a safe bet, and I would remain invested.
And you kind of agree. I think the answers that you give, you believe that IT probably, and you've been bullish on IT. You believe that this quarter will be decent for IT, going by the two numbers that have come out.
Yes, but I think this because of the kind of currency movement that we've had, we need to really watch the margins, because I think even where Infosys has raised the guidance, they've raised the constant currency guidance. So I think even there is some amount of pressure because of currency. So, but yes, I think it's a good set of numbers, and more importantly, as I said, this irrespective of where margins are, if you start getting a feeling that the large deals are not happening, that can actually put a real pressure on the sector going ahead. And TCS numbers certainly seem to suggest that. Right on the back of that, you had that whole report saying that that could be a concern. So that whole question mark of whether it really is a defensive sector at a time like this began to emerge. So I think now you will at least wait for all the numbers to be in before you really put the jury out on that.
Okay, before we move on, finally just one quick word. You also think that seeing these two numbers, is IT going to have a good time in Q1?
Well, certainly IT will have a good time in the next 1 or 2 quarters, for two reasons. One also has to look at relative to what's happening in the rest of the market, and rest of the market there's a lot more turmoil beyond the 5 or 10 stocks in the Nifty which are holding up the Sensex and Nifty at a higher levels. Otherwise, a large part of the market is making new lows and continues to be in doldrums. So obviously, as far as this sector is concerned, it's relatively going to do better than rest of the market. And even in absolute terms, if these numbers continue in the second and the third quarter, Infosys certainly will do much better than rest of the market.
Okay, that's the view that's coming in. The second stock we want to talk about is interesting. Quess Corp had fallen significantly on news that probably they won't be getting some bit of funds, or concerns on receivables they did with some third party deal which had contract with the government. And then the big news came in on Friday that Amazon is buying a stake in the company, which actually propelled the stock. Even was up 20%, it's up another 5%. Which way do you look at Quess Corp? What's the view ahead? What do you make of the news? News first negative, then positive. But what's your ideal view on Quess Corp?
Well, the Amazon news is a positive, but I think that also you need to see in perspective, because what Amazon is actually wants to make the investment is in a sort of a subsidiary of Quess Corp, which they hope will, and they can't buy it because it's an unlisted company, so they're trying to make it through Quess Corp. And that is with a view of increasing the number of service points that they can have, etc. So it's an Amazon long-term strategy which is worked in favor of Quess Corp at this point in time. But those concerns that were there, in terms of receivables, I think those still remain. And now in terms of valuation, it's sort of because of the kind of jump that we've seen in prices, it's because it had lost a lot. So now it's sort of come back to that level. So now I'm a little neutral on the stock. So it's the news is a positive, but now I'd wait to see what happens with the other concerns that were there on the stock.
Okay, what's your sense, Sangeet, on Quess Corp? Any view?
I'm cautious. So I mean, it used to trade at about 100 times a year back. After the turmoil, it's now trades at 35 times. So I think the Amazon bit is, I think it's just a one-off transaction wherein they wanted to infuse funds to set up the DG payment systems. So I don't think there is any more strategic intent from Amazon towards Quess Corp. Also the receivables bit, I mean I heard it on your channel. The management has clarified that they have an escrow arrangement or something. So we'll have to see how that pans out. But keeping all this aside, if you see how they have built this business, it's purely through inorganic route. They have acquired, and that's why you see a robust growth when you see the numbers, whether top line or bottom line. But when you see a return on capital employed or return on equity, they are dismal numbers. So, and that's what is now beginning to show up. When the growth slows down, then the efficiency of these acquisitions will come into question. And I don't think it's trading that cheap. I mean, yes, it's come down by around 50%, but by valuation metrics, I don't think it trades cheap. You can compare it with maybe a team lease somewhere, which has been more focused on their core business of staffing, and they've built it organically. So I would remain cautious.
You would remain cautious. So Vivek, before we move on, you have any view on this entire transaction?
Well, I don't track Quess Corp, so I'll reserve my comments at this point of time.
Okay, that's the view that's coming in on Quess Corp. The other sector we want to talk about is the sugar space. But let's pull up some of the sugar stocks. On Friday, they did extremely well. Most of the sugar stocks did well. Today, a little bit of profit booking happening on the counter. But they've been out of the limelight. A while back, they were in limelight. They've been away from the limelight. Is this consolidation that we're seeing the right time to start accumulating? Sangeet, I'll come to you first. I know you track tea very well because you into that business. But any view on sugar as a commodity or stock specific?
So again, deeply cyclical business. It's a business which is characterized by a 5-year loss and a 2-year supernormal profit kind of business. So a right time to buy would be possibly last year when you had a production glut. I think there still will be a production surplus. The ISMA is expecting about 28.5 million production, but there will be a sizable opening stock in October when we start. So I think the prices may be depressed, but the good part is the cyclicality of the business is somewhat smoothened with the government's initiative to exports and to ethanol blending. So that will kind of reduce the cyclicality, but I'll still wait. The prices have run up. So cyclical businesses like sugar has to be bought on the bottom of the cycle, and so
which are the strong sugar companies, which are the weak ones?
I think the Balrampur Chini and EID Perry, those are having strong balance sheets. So if one has to play, I think I'll stick with the quality ones.
Okay, what's your sense, Sharmila, on the sugar space?
Well, I would completely agree. I think that it's a very politically sensitive sort of a sector. You don't allow sugar prices to go up too much, especially like if you're saying that in as the festival season approaches and Indians being so heavy on sweetmeats and the demand for sugar goes up at that point in time, you don't allow prices to really go up beyond a point, because it hurts the common man. So you don't allow prices to run away at that point in time. You don't, even if there's a glut, you don't allow too much of exports, etc. So it's very controlled. And I completely agree that in the near term we have had that positive because of this whole focus on ethanol going ahead. But again, that is something that we've been hearing about for years, but I really haven't seen it being translated into reality, where you're mixing that percentage of ethanol in petrol. So, but you keep hearing that. And now we've had the first ethanol-based motorcycle launched by TVS. So that I think is a definite positive. And I think that this below normal monsoon may affect the south-based sugar mills a bit, because sugar plantation there will, because sugar requires a lot of water. It's that kind of a crop. But I think everything gets managed because it is a controlled sector, So I would really just typically avoid, because I think as these 7-year cycles and all are very, very difficult to sort of predict and figure out.
Okay, Vivek, you have a view on this sector?
Well, I'll also avoid for the simple reason that a sector which is too politically sensitive and too much of government control and meddling all the time. The key being the state advised prices on sugarcane, which is the basic raw material for the sector, is controlled by the state government in terms of the prices that the sugar manufacturers or the companies need to pay the farmers. That's one side of it. And on the other side, everything is a variable, where you have a sugar glut, they can't export, and the oversupply all the surplus inventory stays within the domestic market system. Sugar prices don't go up. If they go up, I mean, government puts in additional controls to again control the prices, while your input prices keep rising with government itself increasing the material prices, plus your normal inflation in terms of labor cost to harvest and so on and so forth. So in this kind of a business, it's actually, even for the promoters or the people who are in business, very difficult to make money. So I would avoid it. This, as Sharmila mentioned, this whole ethanol story we have been hearing for the last more than 12-13 years. I mean, the first time I heard about it was in 2005, and then it got momentum, and there was a huge amount of capacity which was put up for ethanol and co-generation and process of molasses and all that. That whole ethanol blending program, from the first time it was envisaged to be 10% maybe about 15 years ago, I don't think even after we have still reached anywhere close to that, for the simple reason, I mean, the prices which the oil marketing companies, HPCL, BPCL, IOC, are willing to pay the sugar companies, I mean, for sugar companies don't just find it viable. Now, of course, the current government is committed to fixing the pricing and the volume offtake, but the larger issue is it still means more control by the government, whether state government or central government, in pricing, volume offtake on ethanol and all that, which just adds to too much of uncertainty on the growth and earnings. So I would just avoid such a sector. I mean, there are a lot more other interesting sectors, a lot of interesting stocks which have corrected in the last few months, which probably offer better potential than something where you are at the mercy of the government all the time.
Okay, that's the view that's coming in on the sugar sector. Be selective, but overall it's an avoid coming in from that space. And the final piece we want to talk about is some of the stocks which actually are overvalued in terms of their multiples. You've seen recently counters like Bajaj Finance or a Titan or a Havells correct significantly. We asked our guests whether they know any companies which they believe are facing a bit of overhang or a concern on valuation. Titan is down now by another 1.5%. Vivek, I'll start with you. Any stock that you feel is overvalued and probably should be avoided at this point of time?
Oh, there are a whole lot of stocks which are, even now, after having corrected significantly in the last more than a year, they are still overvalued. But the examples which you mentioned, Titan or Havells or Bajaj Finance and so on and so forth, I still don't have concerns there in spite of their lofty multiples or rich valuations, for the simple reason they continue to deliver growth quarter after quarter. They don't have management issues, they don't have governance issues, and they have strong balance sheets. My valuation concerns are promoters who are dodgy, who have balance sheets which don't add up, who indulge in aggressive accounting and seem to like just push problems under the carpet. And that's where the problems are, because the multiples that you see, or the multiples assigned based on the reported numbers, you just can't believe those reported numbers. And there I would, I mean, we have spoken about these companies before on this very program, but see a DHFL or a Yes Bank or IndusInd Bank, I would have big question marks even now after they have corrected significantly, although IndusInd Bank has not corrected much. But I still see significant downside in terms of valuation multiples contracting for some of these companies. Jet Airways even today trades at 50 rupees or so, and we have discussed that at least on 3 occasions on this very program. I mean, a defunct airline that doesn't operate, doesn't have any assets, doesn't have planes, doesn't have parking slots, doesn't have schedules, doesn't have anything, and yet it trades at 50 rupees and a few hundred crores of market cap. It's just insane. So, I mean, we could go on about specifics, but IndusInd Bank is something that I would be worried about at about 3 to 3.5 times price to book that it is trading at. And I see a significant downside in IndusInd Bank over the next few months.
Okay, that's the view that's coming in on IndusInd Bank. Remember, the numbers came out and the stock did manage to correct after the numbers, even though the street finds it to be in line or slightly better than what was anticipated. Sharmila, which is the stock that you believe is overvalued now?
So I'm going the other way, and I'm trying to find a stock which the market currently loves, and which I think that you need to sort of put a word of caution out there. So I'm going to really stick my neck out on this and say Avenue Supermarkets.
Okay.
So in spite of, I think, the good numbers that they've had and this whole reported betterment in margins, etc., I think that you have to be aware of the fact that there is increasing competition coming to this kind of business. They have opened 8 new stores in this quarter, but I think that also you need to see in perspective that this is a spillover really from the last quarter.
Yeah.
So it's not a great number to start with. And I think that also where the margin picture is concerned, some of it also has to do with the little change in accounting. So first you need to allow one more quarter and have a comparable sort of a picture, and also see how the other people in the space are doing. So yes, the stock had corrected and now it's up today, but now after having seen this run because of reported good numbers, I think you need to be cautious on this kind of a story, because at one time market was giving it very, very fancy valuations. I think still there's a whole section of market that absolutely loves this as a stock, but I definitely think that you need to put a word of caution out there for the price it's trading at.
Okay, Avenue Supermarts is the second stock. Again, it's up 6%, given that the numbers that came out, but overall valuations still look a little stretched according to Sharmila. And Sangeet, which is the stock that you've cautioned your clients against?
So Tata Global Beverages.
Okay.
So I think the story of Tata Global Beverages has been changing time to time, but the numbers are not showing up. It started from a tea company, then the story was of Starbucks rollout that played on for about 3-4 years. Now the story is the consumer business of Tata Chemicals is getting merged with Tata Global Beverages. So the market is ascribing a multiple of about 40 times, 35-40 times, and kind of an FMCG multiple. But this is sharp contrast that the return on equity has been single digits for last possibly 10 odd years, which is not like a FMCG company. And if you see the business mix post the merger of Tata Chemicals consumer business with Tata Global Beverages, about 75% of the revenue is still going to come from salt and tea.
Okay.
Which is a very, very kind of a matured product stream. I don't see a very fancy growth rate or market share capture in these two segments. So I think 40 times multiple to pay to of Tata Global Beverage is too much to ask for.
Okay, that's the view that's coming in. Tata Global Beverages, Sangeet feels that valuations are stretched for a company which probably doesn't have that much of an FMCG exposure. So it's an FMCG type of valuation that the market is subscribing to. But with that, it's a wrap on today's edition of Hot Money. Let me thank all my guests who've come in today. Vivek, thank you so much for coming in. Sharmila, Sangeet, thank you so much for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.
How many places can